Hello, and welcome to this week's episode of Coinscrum Markets. I'm Nisa. Coming up, Guilhem Chaumont returns to review this week's CME Options expiry in crypto RFQ. Teana's been speaking to Binance's CEO CZ about their rapid expansion over the past 3 years. And Philip Gradwell from Chainalysis is back for his regular review of this week's on-chain data. First, a look at this week's blockchain industry news. Compound, an algorithmic money market protocol on Ethereum that lets users earn interest or borrow assets against collateral, is the new king of DeFi. The Comp token has become the largest DeFi token by market cap, its price increasing by 62%, and total funds increased from 100 million to 400 million in less than a week. This shows progressive decentralization and governance rights are becoming big drivers of value accrual, and yield farming showcases Ethereum composability. After pulling out of Libra, PayPal and Venmo will roll out direct sales and buying of crypto to its 325 million users. They will be working with multiple exchanges to source liquidity. Jay Clayton has been appointed by Trump as the U.S. Attorney of the Southern District of New York, leaving the head of the SEC chair open for someone else to take. The crypto industry is anxiously awaiting the choice for the new appointment, as it affects regulation which has been tight in the U.S. Crypto-friendly lender Silvergate is making it easy to borrow against Bitcoin in partnership with custodian Anchorage, who will continue to hold and secure the assets. Apple's App Store and Google Play both approved an app built on Ethereum that allows employees to prove their COVID test results and eventually whether they are vaccinated. Civic hopes their blockchain-based app will ease privacy concerns in contact tracing. Deloitte has a new blockchain survey out that says 40% of respondents have blockchain in production. A whopping 89% of those surveyed believe that digital assets will be very or somewhat important to their industries in the next 3 years. Deloitte interviewed around 1,500 executives in 15 countries. A startup called Roll, with investors including Gary Vaynerchuk and NBA star Spencer Dinwiddie, has announced that it has successfully onboarded 160 artists and social media influencers, minting them their own social tokens, which they can issue to their fans and followers to incentivize continued engagement. Next up, crypto RFQ. I am here with Guilhem from FlowDesk, and it's been a relatively quiet Bitcoin week. Most of the action was in DeFi and Compound, but we're all looking forward to the CME expiry tomorrow, and would love to get your thoughts on that as well as the market overall.
Yeah, totally. Thank you so much for having me. It's always a pleasure to be with you guys. So before we dive into CME, there are a few figures I wanted to share with you today. The first one is about the overall realized versus implied volatility that we have on the markets. Just to mention and highlight that we've gone back actually to new all-time lows almost in terms of implied vol. So that's very far from what we had back in March. So we are looking at more or less 60% implied volatility versus 40% realized volatility. And it's normal to have this kind of spreads in non-volatile markets. The second figure I wanted to share with you is another interesting one. I think it's about the BTC versus the BTC call versus put ratios, where we've had some very interesting months. I believe we've gone from a ratio of 0.4 to 0.8 right before the halving. So 0.8 means that we had 80% of calls by notional versus 20% of puts. And then it's been only going down since. And now we are again below the 50% threshold. So it's really interesting because all the excitement about the halving is now gone, I guess. And in terms of price, from the BTC perspective, we are still at relatively high level. So what is going to happen next is going to be very determinant. And I think this is a very good key insight about what could happen next.
And what do you think that will happen next?
I mean, my belief, it's always been, hovering around the 50% area, historically speaking. So it's very rare actually to see deviate from it. So I think if we have a quiet summer in the equity market and the traditional markets, which I think is quite unlikely, but if we have a relatively quiet summer, it could be very likely that we stay in these areas. And then if markets start to become volatile again, like BTC drops, to the 8K area, I think that there is a good chance that this number will go down again, maybe, to the 30% area. And if it goes up, it's a number that is highly correlated with the market in general. So it could go up, it could go down. I think it would really follow Bitcoin's price.
Mm-hmm. So what about the CME expiry?
So what is happening right now on CME is extremely interesting, and it's quite a first thing we are seeing right now since a few weeks, especially if we look at the open interest. This number is really stunning to see how these volumes have literally exploded in the past weeks. So right now, CME have about 40K BTC of open interest for 200K BTC in total. So we're looking about 20% market share, more or less, and it's growing very, very fast. I remember we've seen like a few days ago, around 4,000 BTC worth of puts being traded in 2 trades. So just for the premium itself, we are looking at a 40 to 50 BTC premium, assuming 60% implied volatility. So there is really something happening, I think, here. For the first time, particularly in the derivatives market, we are seeing a huge interest for traditional venues like CMEs, and it's happening fast. That is also the thing. It's happening really, really fast.
Do you think that's because institutionals feel more comfortable with CME and that since Paul Tudor Jones bought through there, that's what's happening now?
I think that could explain it totally. I think also there is, now the COVID-19 crisis is done. So we've all seen what happened on the markets, whether it's equity, crypto, lots of volatility. And probably, the players are trying to find some diversified exposure. So probably trying to get into Bitcoin as a hedge against the traditional markets, although we know it's far from being the case because of the correlation. And that typically leads me to the next slide, where we can dive into the breakdown of the options that are traded right now on CME. And it is also quite interesting to see that we have 8 times more calls that are being traded than puts. So really what's happening on CME right now, it's not people hedging Bitcoin with Bitcoin options. It's people who want to get long on Bitcoin with significant notionals, probably also as a hedge, but a hedge of the traditional markets, not the cryptocurrency itself. And I think this is quite also fascinating to see that we are looking, at out of the money options with 1 week expiry, 2 weeks expiry options that are 20%. 25, 30% out of the money. So really we have an anticipation of a big moves. At least that's what they are betting on. And we really see how that turns out. But I think that this end of the week will be extremely volatile in general. In total, we have about 150K of BTC expiring if we include derivatives. As far as I remember, this is the highest levels we've ever seen. So that will add a lot of volatility, definitely. And very excited to see how it turns out.
That's great. Do you think that the movement in DeFi that we're seeing has any impact on this?
Yeah, of course it has, because it's giving a lot of public image to the cryptocurrencies in general, and often derivatives have been the easiest way for institutionals to get their hands on the markets. So today, if you have a typical institutionals who want to dive into decentralized finance, that could be complicated. They would need to understand how it works and so on. And derivatives are basically the easiest ways to get exposure to these markets indirectly. So I think obviously all of this is correlated, and extremely excited to see how it will turn out in the next weeks, whether or not we will keep this level of open interest, what will be the overall market share of options versus futures, and all that.
Great. So you'll have to come back and tell us how it turned out in a few weeks.
Yeah, we'll definitely do.
Thanks so much for being with us today.
Thank you.
During the summer of 2017, when the ICO frenzy was in full force, one company raised a relatively modest $15 million to launch what seemed like yet another crypto exchange. Fast forward 3 years, and Binance has gone on to forge a dominant position as one of the world's leading exchanges, with a footprint spanning the globe. This week, founder and CEO CZ joined Teana to discuss the company's meteoric rise and plans for the future.
Hey, CZ.
Hi, Teana. How are you?
I'm really good. Thanks so much for joining us. So I read a Medium post a couple years ago that was really, really succinct and described the 5 camps of crypto. It was written by a woman named Casey Caruso. And Casey described these 5 camps as the sound money camp, the payments camp, the open finance camp, DLT camp, and the Web3 camp. So, you know, kind of the different people that get into blockchain or crypto. And over my career, I've visited most of these camps, but for me, really the open finance camp is where I see the most opportunity. Kind of, I got into crypto because I wanted to be part of this evolution of money, right? And so I think, you know, we both started our careers in traditional finance, and we both find ourselves in crypto today. And I know your vision has been to increase the freedom of money globally, and to significantly improve the lives of people around the world. So I'd like you to tell us a bit more about how you put this vision into action. And would it be fair to say that you're attempting to bring together an ecosystem that spans across all the camps of crypto?
Sure. I think looking back, it feels like we started to build an ecosystem, but to be honest, the ecosystem is more the result. I think when we first started out, I personally got into crypto probably because of the a better money camp. Like it's just a better form of money.
Yeah.
And then when I said, well, I'm gonna dedicate my career into this new industry, I try to figure out what do I know best. And I spent my whole life building exchange systems. So that's kind of the natural thing to do. So when we first started, we were really just trying to build a exchange. So that was like very singular focused. Mm-hmm. And once we built a crypto exchange, we didn't even have fiat service back then. Mm-hmm. And we said, okay, what other people just ask for more and more features? What other things can we do? Can we do gas distributions? Can we do staking? Can we do more and more? Can we do mining? So all of these things were asked from our users. So we kind of slowly expanded our business based on user feedback. So it's not so much we set out to do a sort of ecosystem. So I think we just focused on building products we know how to build and we think people will love. So once we build a product, we try to make people see people use it. If people don't use it, then we stop it. Yeah. And we reiterate. And also with the success of Binance, we got quite a bit of I would say cash on our hands, and we were able to grow. And the way to grow is either hire more people or merge with other teams or acquire other teams. So we've done a few acquisitions. And acquisitions are good that the team comes with a product or even with users sometimes. So in many cases, we acquired products where I'm not an expert in, like CMC. I'm not an expert in like running a data website, for example. So over the course of the acquisitions, we now have an ecosystem. But it wasn't sort of we want to build an ecosystem from the beginning. It was more of the natural evolution of things.
So you've been described, I've heard you described many times as a serial entrepreneur, and Binance has indeed experienced some very rapid and impressive growth. And I've heard you discuss how you got into blockchain. So, you know, people ask you, you've told the story before. But I'd like you to tell us the moment, like the aha moment when, you know, the clouds opened and the birds sang and you knew that you wanted to found Binance.
there was a couple of different moments there, but the memory is very clear. But I'll backtrack a little bit further. The crypto-to-crypto exchange is not a new idea. So when in 2013, when I first kind of got into sort of Bitcoin industry, there was discussions about running a crypto-to-crypto exchange. But the industry was so small back then. The industry was a Bitcoin industry back then.
Right.
In 2015, we revisited the idea again, but still at that time, Poloniex was already around. B-Trex, I'm not too sure. Even if they are, they'll be quite small. So even Poloniex was quite small. We felt, well, it's still too early. 2017, there's a couple of instances that led to the idea. The idea was brought to me again in 2017. The ICOs are just starting in March, right? So and it was getting pretty hot. And I met with the founder of Neo. Back then it was called Antcoin. So I met with Da Hongfei for dinner in Shanghai, and I said, well, I'm thinking about running doing a crypto-to-crypto exchange. What do you think? And he just immediately said, look, you should do it, and I'm going to invest. And he said, well, he wants to invest in us and back us. I was like, wow, that's a pretty strong endorsement. I've known him for like a few years then already. And so that was like one trigger. And so that was end of May. So that was May 29th or 30th-ish. And then on June 1st to June 10th, there was another ICO running in China. And that ICO was ran by the co-founder of BTC China. He left BTC China and was doing another project. So in 10 days, he was able to raise $15 million equivalent in crypto. And that's the biggest ICO in China by then. And I was thinking to myself, well, if he could do it, I probably could as well. He's quite well known in the Chinese crypto industry. But he's not very well known outside of China, whereas I'm relatively known in China and also have some exposure outside of China. So if he can do it, I probably could as well. So and then there was the very historic moment of June 14th. I went to Chengdu to a potluck dinner. There was a Bitcoin conference or blockchain conference in Chengdu, and at night, Chandler Guo, who now lives in the US now. He's kind of a big KOL in the Chinese circle as well. Yeah. He hosted a potluck dinner with 500 people. He spent 2 Bitcoins on it. And everyone's talking about ICOs. Everyone's like, you should do an ICO, you should do an ICO, you should do an ICO. So I met with a bunch of the OG gang. And so that night I called my team, say, okay, we're going to do an ICO. And nobody on my team knows what an ICO means. Right? So let's Google the word, and we're going to write a white paper. And so that was the day. So there was a couple of events leading to that. So that's the time when we said, okay, no, yes, we're gonna launch. Number one, we're gonna run a crypto-to-crypto exchange. It's gonna be called Binance. We picked the name already, and we're also gonna do an ICO. So that was within that 2 weeks. So that was like end of May to mid of June. And from mid of June, we started writing a white paper. By June 17th, we published the white paper, the first version. We did a private sale by June 20th and ran the first ICO session on June 24th. And by July 2nd, we closed everything, raised $15 million equivalent in BTC and ETH. And then 2 weeks later, we launched the exchange. So on July 14th. So that was that whole that's the most compressed, really like no sleep to like a month in my life. Yeah.
Yeah, I can imagine. That sounds wild. One of the things that strikes me about that story is, when I speak to regulators and government officials about, they'll often say, give us a use case for crypto. Tell us how crypto helps people practically, give us an example. And interestingly, last year when the FCA came out with their crypto asset guidelines, one of the things that they did say was that they see that the ICO model in and of itself actually has a lot of value additive properties around capital raising, and that the route to the journey from getting the money in and building the thing can be accelerated. We've seen some companies that potentially have undertaken an ICO, probably in very good faith, and then ended up with all this money and then didn't really have a plan or couldn't necessarily execute on it, or maybe their idea was a bit flawed. And in traditional VC, you would have advisors, right, to kind of help you pivot. So I think there's something really magical and powerful about having the ability to raise money if people really believe in your idea, but then executing on it. And, Binance did, and some other people didn't. So, there's nothing inherently wrong with the ICO model, but you do have to know what you're doing, right? You do have to have people in your team that know how to execute, because otherwise you're going to end up with an awful lot of money that you might not be able to spend super effectively.
I think having gone through that experience myself, I totally think that ICOs or blockchain fundraising in general is a super useful tool that we have now. So blockchain fundraising allows us to raise money from people all over the world. So that has helped companies like Binance to grow very quickly. There are plus and minuses versus a traditional VC investor. For example, if we were dealing with a traditional VC investor, Binance would be much, much slower in growth. It would take us, 3-6 months to raise a round, and then grow some, and then raise another round, etc. There are other limitations as well. Having a VC typically will have to have much heavier legal infrastructure, etc., localized in one region. We will not be able to grow in a more internationalized global exchange. So there's a lot of differences there. But again, there are risks. Even in the traditional VC world, most startups fail, right? So even if the team's totally well-intentioned, the team's experienced, skilled, they still fail. And Binance, we got lucky. We could have failed 1,000 times. So we got lucky. We had a strong team, obviously, but we were also lucky in a lot of areas. So people have to realize those kind of inherent risks.
Well, you raise an interesting point about the ability to raise capital globally, and coupling that with global good. Right. So it could be initiatives like, remember when Bill Gates was trying to build those toilets that didn't need water in Africa, right? So that, because they couldn't put the plumbing in, or things around climate change that we could fund, that are going to cost a lot of money, and to put that burden on any one or a small group of governments to be able to fund that. So if you're impassioned about an issue that affects global good, then you would be able to contribute to that. I think what the challenge is, when anything is new and we're still in that nascent phase, I used to say that we're not an infant anymore, we're toddlers, right? Crypto is in the toddler stage, and people expect toddlers to be able to sit still and not scream and act crazy, right? There's not for a long time, but for a period of time. So we need to grow up a little bit. And so I wonder if there's reputational impact that happens when something is growing and it's finding its way, that potentially prevents people from seeing those big opportunities to actually change the world. And I agree with you. I think they're there. But, when we see news like, the Wirecard incident, that's traditional finance, but crypto's thrown in there, right? And then, we get this blowback. So I think that those big life-changing projects were small, but how does the reputational blowback affect people getting involved in those projects?
Yeah, I think, anytime something negative happens with any financial thing related, crypto gets the blame, right?
Yeah.
So we've seen that a lot. But I think the narrative is really changing nowadays. 2 years ago, people still talk about Bitcoin owners as drug lords. So I think nowadays, things in the last 2 or 3 years, things have already changed really much for the better. We have central banks issuing digital currencies. We have countries pushing for blockchain education. So now we kind of we've already gone a long way.
Okay, so let's shift a little bit to kind of markets. You've spoken recently about what it takes to grow a truly global international company, and your views on thinking globally but executing locally. So, the global approach. In just 3 years, in addition to the huge growth on Binance.com, you've launched several affiliate and partner marketplaces across the world, from places like Singapore to Jersey and Korea to the US. What were some of the unique lessons that you learned from each country? And does expansion get easier with each new product or project?
Okay, I'll answer the last one first. You see, it's an easier answer, but the answer is that it doesn't get easier. It stays equally difficult as we expand. I think we do learn a lot of lessons, but anytime it gets easier, we just push faster. So, and the team's growing in size. So with the larger teams, it'll be harder to coordinate. We do have a lot of lessons we've learned with the sort of what we call the OG team or the people who've been with us a bit longer. But every time we establish a new exchange in a new territory with a new partner, there's a lot of lessons. And the key lesson we learned is in order to go global, we really have to go local. So we really have to have a local team who understands the local culture, the local business, the local regulations, have relationships with local policymakers, etc. Yeah. Every place is different. The US is like very heavily regulated, lots of different regulatory bodies, lots of different rules. Asia is a little bit different. Europeans have like different regions, like European has a lot of countries, there's a union, currency is very free-flowing across countries. So everywhere the atmosphere is a little bit different. So what we learned is actually we really just have to go local and learn, we have to go there and learn the local culture and the local atmosphere. And it's best to have the local team. So, and having the local team getting adopted into our existing sort of Binance team, finding a local team that shares our vision, our mission, our culture, and being able to execute, collaborate together. There's always, it takes time. Mm-hmm. So there's always a lot of stuff to do, but it's very meaningful to do. Like when things work, they work well. And when sometimes things don't work and we just gotta fix it. So, but overall, it's a very challenging and also very rewarding experience. But we're still at the beginning of the learning curve. We only have a few countries so far, and we're about to learn more about UK. So UK is maybe a little bit easier, maybe, but because number one, English, number two, UK is a fairly developed economy, mm-hmm. But we'll see. I think you'll still be a challenge.
I was hoping you were going to tell me it was going to be a breeze. It was just going to be smooth sailing.
No.
No. Okay, good to know. Yeah. Thank you.
Yeah.
Okay, 2 years ago, Laura Shin asked you to compare and contrast the crypto market in Asia and the West. And that whole interview was really great. I encourage people to listen to it, even though it is a couple years old, but it was a really good interview, CZ. But that question, I think, was really interesting then. And so I'd like to know what's changed in the last 2 years. How's the world view of the crypto market evolved?
Okay, I think in terms of culture differences between sort of US, East to West, probably not so much have changed. But in terms of regulations or the view on crypto, I think a lot have changed in the last 2 years. Mm-hmm. So I think US right now, there's probably more or less a clear way to do things. There's a big exchange, Coinbase, running in the US, and they have a certain set of licenses. They have a certain way of doing things, which are more or less viewed as the accepted way of doing things. Mm-hmm. And they haven't got into a lot of trouble. So this sort of like a recipe on doing things. Mm-hmm. And the regulators kind of have a sort of even though only New York has a BIT license, but most other states use either a MTL license or the FinCEN registration. Yeah. So there's a way to do it. Whereas in China or Asian country, Asia is a little bit different. Asia, there's one big China, and there's a few other small players which are also financially developed, like Singapore, Hong Kong, Korea, Taiwan, Japan. So they're all developed financially. Mm-hmm. China has, for the last 2 years, also has been negative on exchanges and Bitcoin, but they did a 180-degree turn on blockchain. So they're pushing blockchain very, very hard, and they're accepting blockchain, encouraging blockchain education, and they're pushing a centralized digital currency, so the DCEP. So that's all positive. In terms of regulations around, Singapore is very open towards fintech innovation. So by default, they're relatively friendly towards blockchain technology companies or even Bitcoin businesses. EU is a little bit different as well. So EU always had this sort of open atmosphere that, as far as I can tell, because EU already has many countries that shares a currency. So historically, right? So that's the EU. And when you travel across borders in the EU, there are no borders. You just drive on the highway, you end up in a different country as you drive, and there's no line, there's no immigration officer you have to go through, etc. So the border aspect of it is already more blurred, and the European guys are have an easier mindset to adopt to a different currency.
Let's do one more question around DeFi, because I think that that's one of the topics that I'm seeing come up a lot. And I don't know if this is becoming more popular as conversation because of all of the QE activity that's happening from, a central bank perspective, or if it's just, the latest, trend or fad. I think there's a lot of interesting opportunities, but with those opportunities comes risks, right? So I'd like to get your view on the DeFi. What's the deal with DeFi?
I think DeFi is just another one of those applications or innovations that people have brought into the crypto industry, and I think it's a really good thing. DeFi is at the early stage. So it's been about a year and a half. People talk about DeFi. DeFi is I think 2 years ago, DeFi is not even a word.
No.
So it is relatively new. So I think as all things new, there will be a high rate of failures. So there will be a number of DeFi projects which probably will fail. And some people will lose money over it. But that's just the nature of new things. But I think DeFi, the concept itself, will stay, and there will be a small number of successful projects that will stick around, and that will last for a long time and could potentially be very valuable as well. And they will continue to provide a valuable service in this space. So I think DeFi, the concept works. The exact execution of it will need some experiment. Most projects will fail, just like any other new projects do, but some will succeed. So I think it's a really interesting space to keep an eye on, and I think it will also help the growth of our industry.
I think that is very true, and I think people used to ask me all the time, like, "What's the next killer app? Like, what's the killer app that's going to mainstream crypto?" And so I'll ask you, what's the killer app? And is it something related to DeFi where people can save or invest in a way that is completely decentralized? Is it just about them learning, or is it giving them a tool that makes it so easy that they just can't help but not?
Yeah, it's very difficult to predict which was going to be the killer app. I mean, if you ask me at the end of 2016, what's going to be the killer app for the next, like, say, what we call pump, or the sort of the really crazy period in 2017, I would not have said ICOs. So even then, I would not know. So I think DeFi definitely has the potential to be a killer app. I think blockchain fundraising will continue to be a tool that people will use for the strong entrepreneurs. Whether it's going to be something else, e-commerce, payments, or other things. So all of those things are possible, but that's very hard to predict. Teana. Thanks.
Thanks, Teana. Next up, Philip's back with his review of this week's on-chain data in this week's on-chain reaction.
Thanks, Nisa, and welcome to On-Chain Reaction. I'm Philip Gradwell, the Chief Economist at Chainalysis, here to take you through what's been happening on the blockchain. Well, this week, the Bitcoin price, it peaked at $9,750, but it's typically been less than $9,500 this week, which is below the 30-day average. It does seem that the Bitcoin price, it's starting to drift. And we see that if we look at the Bitcoin inflows to exchanges. They didn't respond to that jump in the price. It's been pretty flat, and they're at just 53,500 Bitcoin per day on average this week, which is lower than we've seen in the last 180 days. There's also a sense of drift when we look at Bitcoin trade intensity. It's been declining, showing that trading volumes are following exchange inflows downwards, as the trade intensity is that ratio between the number of Bitcoin traded and the number of Bitcoin received on chain. Like exchange inflows, this metric is at its lowest level in the last 180 days. What has been growing has been the number of Bitcoin on exchanges. There was a very large outflow on the 18th. We think that could be an internal transfer, or it was an individual withdrawing a very large amount of Bitcoin. But if we exclude that, then overall, the balances of Bitcoin on exchanges have been growing. We've also got a new metric to look at exchange inflows of Bitcoin. Here, we're looking at the origin and destination of all of the Bitcoin flowing on the network in the last 7 days. That Bitcoin, we say it's flowing between in transit if it's actually moving from an unknown address. And what we saw in the last week is that Bitcoin that have been held in unknown addresses since the start of the week actually started to flow into exchanges. There was a net inflow of Bitcoin worth $822 million from unknown addresses. So we saw $922 million worth of Bitcoin go from exchanges to these unknown addresses, and we saw $1,744 million go from these unknown addresses into exchanges. So that suggests that Bitcoin that is typically held off of exchanges has actually started to flow in, increasing the overall amount of liquidity that is on exchanges. And taking a look at Tether, we've seen an increase in Tether balances as well. There's some uncertainty that exists here because a lot of Tether is either being taken straight off exchanges or is being swept into cold wallets, and we're not yet sure about that. But if that Tether isn't exiting the exchange and is just being swept into cold wallets, we're actually seeing some of the greatest increases in Tether balances that we've seen in the last 180 days. So overall, exchanges, it look like they're losing their fizz. It's been a sideways week. Inflows to exchanges were unresponsive when the price changed, and the trade intensity has been declining. It's likely that most people are still adding Bitcoin and Tether to exchange balances. And overall, Bitcoin that was held off exchanges for more than a week, it's flowed in. And that suggests that new liquidity is being added over and above the usual flow of Bitcoin that just passes between exchanges. So it looks like the markets are a little bit weak. There's a lot of Bitcoin and Tether being held on exchanges. Some of that from people who've typically been holding on to that Bitcoin and now might be sending it to exchanges to sell. So we'll have to see what happens in the next week. It's back to you, Nisa.
Thanks, Philip. You've been watching Coinscrum Markets. See you again next week.